This morning, we continue from where we stopped. The topic we started last week is public sector budgets and budgetary control system. We have discussed what is budget, what are the purpose of budgets in public sector. We have also discussed what are the problems of public sector budget in Nigeria. We have done that last week. We also look at another area called condition for successful budgets. We also look at budget preparation procedure last week. Last week again, we also talk about function of ministries of budget and planning. We have done that last week. So this morning, we are going to proceed again. We look at some other areas in budget. So we are going to start with cash budget. Cash budget. You know, we classify budget. When we are looking at classification of budget, we said we can classify budgets. First classification we have is classification according to functional activities. Classification of budget according to what? Functional activities. In that case, we have revenue budgets, we have overhead budgets, we have personnel budgets, and we have cash budgets. We have talked about revenue budget, we have talked about overhead budget, we have discussed personnel budget. So the only area we have left on classification according to functional activities is this man called cash budget. Cash budget. So what is cash budget? We look at that. How do we prepare cash budget? What are the purpose or importance of cash planning? We also look at that. Like we all know, cash budget simply means the summary of cash flow. The summary of what? Cash flow effect that shows the summary of cash flow effects that shows the income projections and expenditures projection. So cash budget means the summary of cash flow effect of all the functional policy related to budget by coordinating them into summary statements. Summary of what? Cash flow effect of all the functional policy related to budget by coordinating them into one summarized statement. One of the benefits of preparing this cash budget is, while preparing the cash budget, we can ascertain the expected cash deficits. And once we know that we are likely to have cash deficit in cash budget, the cash deficit, we can look at how can we fund the cash deficit. How can we fund it? So expected cash deficits are identified in advance. And financing plan to avoid situations where committed cannot be met due to what? Lack of cash. We look at is one of the benefits that cash budget give. Another benefit that we can derive from this cash budget is cash budget help us to minimize cash committed to surplus. That means cash budget will help us to invest cash surplus. If we have too much of cash, idle cash, it will not give us any income. We don't need to have too much of idle cash in hand. Those idle cash, we can invest it in an investment that will generate inflows. So if you want to prepare cash budget, preparation of cash budget, we need the projection of cash sales. We need the projection of collection of customer debt. We need the projection of our proceeds from sales of assets, issuance of shares. So this cash budget, while preparing it, we need to divide, we are going to divide it into two. We will have inflow and we will have outflow. The difference between inflow and outflow, it is called net flow. And this net flow, we may have open the cash balance. We are going to add it to the net flow. When we have the open cash balance, we add it to the net flow so that we can get closing what? Cash balance. So that is cash budget. In cash budget, like I said, we have inflow. Inflow means all the income, all the revenue that you receive in cash. While outflow means all the expenses that you pay in cash. So while preparing your cash budget, you divide your solutions into two. Inflow will be at the top, outflow will be at the bottom. So at the end of the day, we need to get the total inflow and we need to get the total outflow. Cash budget too can be prepared either on a monthly basis or on a quarterly basis or on a yearly basis. It depends. We can prepare cash budget every month. We can prepare cash budget every quarter. We can prepare cash budget every year. But the most common one is every month. They can ask you prepare cash budget for 6 months, commencing from January. That means you need to prepare cash budget from January, February, March, April, May, June. The closing balance of January will become an open balance in February, while the closing balance of February will become an open balance in March, vice versa. So in this cash budget, another thing we need to know in this cash budget is objective of cash planning and management. Why do we need to plan our cash? Why do we need to plan our cash? Objective of what? Cash planning and management. Why do we need to plan our cash? Objective of cash planning and management. What are the objectives? So this objective of cash planning and management, we can relate it as objective of cash budget. Cash budget can be expanded in another way. We can call it cash planning and management. This cash budget, we can relate it to another way, call it cash planning and what? Management. What is the objective of cash planning and management? Number one objective of cash planning and management is to facilitate the knowledge of amount of liquid cash available to execute projects. To facilitate the knowledge of liquid cash available to execute what? Projects. So to facilitate the knowledge of amount of liquid cash available to execute what? Projects. We want to know the amount of working capital we have on ground so that we can use it to execute some projects. Is one of the objectives of cash planning and management. Another objective of cash planning and management, it shows the organization or the establishment the likely period of cash shortage. It shows the organization or so somebody is asking, what page? I can't find this topic. It seems like I have different material on the one projected. I've shared this material last week and I'm on page 22. I've shared this material last week and I'm on page 22. So, objective of cash planning and management. It shows the organization or the establishment the likely period of what? Cash shortage, so that loan and overdraft can be raised and some marketable instruments. Organization can know that in this January, through our cash budget, or in February, we may have cash shortage. So how do you need to fund? How can we fund this cash shortage? We can fund this cash shortage by getting an overdraft or loan, or we can issue some marketable instruments. So all this can be used to fund the cash shortage. Another objective of cash budget is it shows the period of surplus. It shows the period of surplus cash. Cash budget shows period of surplus cash, which can be invested to earn some return. Through the cash budget, we will know the period of surplus, where we have surplus cash. So this surplus cash that we have, this surplus cash that we have, we can invest it in an investment that will yield more return to the company than not using it at all. Another objective of cash budget. Cash budget ensure optimum cash level in maintaining the ordinary course of business or day-to-day. Cash budget ensured that optimum cash level is maintained in the ordinary course of business of day-to-day operation. Cash budget ensured cash management ensure that optimum cash level is maintained in the ordinary course of business of day-to-day operation. Is one of the objectives of cash planning and management. Another objective of cash planning and management is unutilized surplus cash can also result into decrease in profitability, so can easily invest on a short-term interest rate. That surplus cash, we can invest it in a short-term investment so that the investment we invest it on, if we need our cash immediately, we can liquidate the investment so that we get money to run our working capital. Cash budget, we also knowledge of cash availability will also help us to pay our debt as at when due. Knowledge of cash availability will also help us to pay our debt as at when due. And cash budget, cash planning and management, which is called cash budget, we also ensure that future contingency can be easily met. Future contingency through the preparation of cash budget, future contingency can be easily met. This objective of cash planning and management in our elementary schools, secondary schools, there is in economics. We are being told what are the reasons.
Yes, you can.
Okay, sorry for the interruption. So we are an objective of cash planning and management. We have looked at the objective of cash planning and management. Now, let's look at weakness on current system of cash management in Nigeria. Weakness on current system of cash management in Nigeria. What are the weaknesses on the current system of cash management in Nigeria? What are the weaknesses? Number one weaknesses on the current system of cash management in Nigeria is inadequate tracking and monitoring of independent revenue. Inadequate tracking and monitoring of independent revenue. So these weaknesses is applicable to government. Weaknesses of current system of cash management in Nigeria. Or we can say weaknesses on the current system of cash management of Nigeria government. One of the weaknesses on the current system of cash management of Nigeria government is inadequate tracking and monitoring of what? Independent revenue. Inadequate tracking and monitoring of independent revenue. Most of the revenue to government, they don't track them, they don't monitor them. In most of the cases, most of the government revenue is being diverted to private accounts, private spots. So it's just of recent, one of the measures that government put in place to ensure that their revenue is not diverted. I'm talking of federal government. They introduced remitter, single TSA account. You can pay to the TSA account using a payment platform called remitter. So this remitter have helped tremendously to reduce diversion of government revenue. Another problem of cash management to Nigeria government is what? Over dependence on federation account. Most of the states, local government, they are not looking on how they can generate revenue internally. They are mostly depend on federation account, which the revenue is coming from oil and gas and corporate taxes. So most of the states depend on what they are collecting from the statutory allocation every month. They don't look inward on how they can generate revenue on their own. Another one, lack of strong interagency collaboration. Lack of what? Strong interagency collaboration. Lack of strong interagency what? Collaboration. We don't have a strong interagency collaboration between the different agency of government. The collaboration between Federal Ministry of Finance, Accountant General, Bank of CBN, Debt Management Office, FRS, is not the collaboration among all these revenue generation agencies. It's not cordial. You understand? It's not cordial. Like now, this new tax reform now is trying to have a uniform revenue collection system that all the revenue should be collected by National Nigeria Revenue Service, which is FRS. You understand? So most of these government agencies, they are not in support of that initiative. They are not in support of that development, in a sense that it's going to make them idle. When you are saying that the custom duty should not be collected by Nigeria custom, it's FRS that will be collecting custom duty. What Nigeria custom should be doing is just for the operation and enforcement of the act. They should not be the one collecting the revenue. It will not make they are not going to certify with that initiative because they believe that it's not giving development, it's not giving growth to their agency. So somebody raise hand. What is your question?
Good
You can
morning,
go
sir.
ahead. Yes,
Please,
good
sir,
morning.
point number 2, our dependence on federation accounts. How does it constitute to the weakness on the cash accounts in Nigeria? That point number 2, over
Yes,
dependence on federation.
yes, this one refers to states, state governments. State government, they need to plan for their cash management. But they don't plan for their cash management. They don't do cash budget because they are dependent so much on federation accounts. Why are we doing cash management as a state, as a local government? Because we know that every month money will come from where? Money will come from the central. Money will come from the statutory allocation. So we don't need cash management. We don't need cash budget. Some of the states don't do cash budget because they believe, why are we needing cash budget? We have enough of money coming from the federation account now. So that is the thing. Existence of idle fund. Existence of idle fund is one of the problems or weaknesses of cash management to Nigeria government. Existence of what? Idle fund. So some of the idle funds will just exist, they will not invest it. Example, government have to go through ways and means loan to finance some project, while we have some idle fund in other accounts. They will have used those idle funds. You can imagine before the introduction of TSA, most of the commercial banks, they are using government account as a cash cow. There will some government agency will have idle fund in their commercial bank account. Another government agency will come to the same commercial bank to come and borrow money. The same commercial bank they will borrow federal government agency, another federal government agency the money, and they will also charge interest. So commercial bank, they are using the government to make money before the introduction of TSA. But right now, in the federal government level, we have a uniform account called TSA account, which you can pay to it through remitter. So another problem of cash management in Nigeria is inability to effectively monitor oil revenue. There is no structure put in place to monitor the oil revenue that's paid to the federation account. There are a lot of diversion of crude oil, diversion of oil revenue. You understand? Government did not put a lot of structure put in place. So even the NNPC, which is the custodian of government in the oil and gas sector, they can't. If you do, there are a lot of forensic audits that they have done in the past that they discovered that a lot of diversion of funds is being made by the NFET top management, and nothing is being done up till now. So, for the sake of time, let's look at the question on cash budget so that we can move to the next area. Let's look at a question on cash budget so that we can move to the next area. Examinable question 1. Let's look at that. Somebody should help us read. Oh, yeah.
The General Manager of Housing Corporation of Rivers State has requested for the cash position of the organization for the first quarter of the year 2008. The following information is available. Sir, please go up.
Oh yeah.
Number one, the total annual subventions from the federal government in 2007 was 15 million. There is expectation that this figure will increase by 10% in the year 2008. The expected 10% increase will be received in the first 6 months of the year, along with the normal monthly allocations. Two, the management has decided to reduce transport and traveling by 5% in the year 2008. The total amount in 2007 was 1,890,000, and the expense will accrue evenly throughout the year. Three, capital grants of 7 million monthly is expected in February, May, and November. Four, sir, please go up. Four, salaries and wages for 2007 were 14 million. 25% of the total amount was for housing allowance. Salaries and wages will be 150% of the amount paid in 2007. 5. Ground rents for industrial estate will be received as follows. January 1.4 million, February 75 million, and March 1.2 million. Then 6, the training and development expenses of 350,000 are to be increased by 10% in the year 2008. The total amount to be spent on equal basis in February and October 2008. 7, the corporation will commence construction of 50 units of houses in the year 2008. The following are the commitments through LPOs in 2007, which will be met in the new year. We have item purchase date, LPO number, when payable, and the amount.
Okay.
Yes. Then we have the materials needed.
Okay. Just
Then
go to the
number
last
8,
page.
rent
What is
receivable
the
from the shopping
requirement?
complex of the corporation. Okay. Required. Prepare a cash budget for the first quarter of the year 2008, stratified into monthly distributions.
So we are asked to prepare cash budgets for the first quarter of the year 2008, certifying into what? Monthly distribution. The cash budget for the first quarter. Which one is the first quarter?
The first 3 months.
Which is January, February, and what?
March.
March. When we want to prepare cash budgets, they say we should start from January, February, and March 2008. Abi?
Yes.
We need open cash balance in the month of January. The open cash balance in the month of January is going to be the closing cash balance of which month?
December 2007.
December 2007. So this last note, the cash balance as at December 2007 was 750,000. Is going to be what? The open cash balance in January 2000 and what? 2008. While preparing your cash budget, like I said, you will divide your solution into two. We will have inflow. We also have what? Outflow. This is inflow. You can see the total inflow. This is outflow. So the difference between the inflow and outflow will be the balance carried forward. The first thing we need to do under your inflow is to bring up your balance brought forward, which is the balance in January. The open cash balance in January, that is the closing cash balance in December. The closing cash balance in December, which is now open cash balance in January, is 750,000. You will bring that in. Now, let's go to those notes given to us one by one. The note, we will ask ourselves, this note, is it an income, is it an inflow, or is it an outflow to this organization? First note given to us, they said the total annual subvention from federal government in 2007 was 15 million. The total annual subvention from federal government in 2007 was what? 15 million.
That's inflow.
Yeah, an inflow.
It's an inflow. That subvention is an inflow. There is expectation that this figure will increase by what?
10%.
10% in 2008. For the year 2007, they received 15 million. They are now saying the one they are going to receive in 2008 is going to increase by what percentage?
By 10%.
By 10%. 10%. So that means how much that they will receive in 2008 is going to be 110% of 15 million. Abi?
Yes, sir.
Which is how much? 16.5 million. Ideally, that 15.5 million, we're supposed to divide it by how many months to know how much that they will be receiving every month.
12 months.
We're supposed to divide it by 12 months to know how much that they will be receiving every month. But this question goes further. Said the expected 10% increase will be received in the first 6 months of the year, along with the normal monthly allocation. The expected 10% increase will be received in the first 6 months of the year. The first 6 months means January to June, along with what? With the normal monthly allocation. So let's look at it. The workings. For 2007, we received 15 million. We are projecting that there will be 10% increase. 10% of 15 million, 1.5. Addition of the two, meaning that in 2008, we want to receive 16.5 million. But they are saying this 16.5 million, how do you want to receive it? From January to June, we are going to increase, we are going to receive both the normal one and the 10% increase. That means what they are saying in this question is this 10% increase, you need to divide it by how many?
6.
6. You need to divide this 10% increase by 6 because it's going to be received from January to June. Firstly, this 15 million, we divide it by how many? 12. Because this 15 million, we are going to receive it every month for the 12 months. So we divide this 15 million by how many? By 12. So 15 million divided by 12, it will give us 1,250,000. $15 million divided by 12, it gives us 1,250,000. 1.5, we are going to divide it by what?
6.
1.5 divided by 6. it will give us 250,000. That means from January to June, how much that they will be receiving every month?
1.5.
1.5 is what they will be receiving every month from January to June. Why? From July to December, how much that they will be receiving every month?
1.250.
At the end of the day, if we times 1.5 times 6 and 1.250 times 6, if we add the two together, it's going to give you how much? It's still going to give you 16.5. Do we understand? So
Yes, sir.
go back to the solution now. Annual subvention. January, we received 1.5. February, 1.5. March, 1.5. Now, the next area we need to look at is Note 2. What is Note 2? The management has decided to reduce transport and traveling by what? By 5% in the year 2008. The management decided to reduce what? Transport and traveling by 5% in the year what? 2000 and what? 8. The amount that was received in 2007 is what? 1,890,000. And these expenses is accumulated evenly throughout the year. These expenses will accrue evenly throughout the year. That means they will receive it every month. Now, if you want to get the amount of 2008, we know that it's going to reduce by 5%. That means in 2008, they will receive 95% of what they received in 2007. Do you agree with me?
Yes, sir.
95% of what they received in 2007 will be received in 2008. So let's look at the solution. Transport and traveling. Transport and traveling, is it an inflow or outflow?
Outflow.
It's an outflow. It's an expenses. So we receive in 2007 1,890,000. There will be reduction of 5%. 5% of 1,890,000, giving us 94,500. So this 94,500, when you minus it from 1,890,000, what will be the balance? 1,795,500. 1,795,500. That is what they will receive for the whole year of 2000 and what? 2008. So, you know, this our cash budget is every month. And we're asked to do the month of January, February, and what? And March. So, yeah. What do we now do with this? What do we do with this?
We divide it by 12.
We divide it by 12. So once we divide this by 12, it's going to give us 149,625. That is outflow, transport and traveling. Outflow for January, 149,625. For February, 149,625. While for March, 149,625. So let's go back to the question again. Note 3. Capital grant of 7 million monthly is expected to receive in which month? February, May, and November. Capital grant, is it inflow or outflow?
Inflow.
Inflow. So we are expected to receive it in which month?
February, May,
February.
and November.
So in this our cash budget, which one was affected?
February.
Only February. So one of the inflow, capital grants. February, 7 million. Note 4. Salaries and wages in 2007 for 2007 was 14 million. The 2007 salaries and wages is 14 million. 25% of this total amount of 14 million was for housing allowance. Why the salaries and wages will be, the salaries and wages for 2008 is going to be what? 150% of what?
The amount paid in 2007.
So what is 150% of 14 million? 150% of 14 million.
That's 21 million.
21 million. That is 150% of 14 million. 21 million. 25% of that 21 million is going to be what?
Housing allowance.
Housing allowance. So let's look at the solution. 2007 salary is 14 million. 25% of it, 21 million. Now, housing allowance, 150% of 14 million, 21 million. 25% of this amount, 25% of 21 million, which is for housing allowance, is 5,250,000 every year. The net salary, excluding housing allowance, is 15,750,000. Monthly, we need to divide it by 12. If you divide 15,750,000 by 12, it will give us 1,312,500. Housing allowance too. For the whole year, 5,250,000. If you divide it by 12, it will give us 437,500.
Sir, please, I don't get that on salaries and wages. I'm so sorry.
Okay. Look at the question. Salaries and wages for 2007 is how much? 14 million.
Mm.
Hello, sir. But from the hello, sir.
It's like network are speaking now.
Please, I want to ask a question now. But we are not given the 75%, and then we only show that 25% amount will be on housing allowance. Because I don't
Yeah,
understand why the government.
that's the balance. If you let's say the total 14 million is 100%, so 25% is for housing allowance, meaning that 75% is for salaries and wages.
Okay, thank you so much. I really appreciate it.
You're welcome.
Hello, sir.
No, you hear me?
Yes, we can hear
We can
you.
hear you, sir.
So salaries and wages,
You were trying
this
to explain.
21 million, 25% of it is for housing allowance. What
Please,
the
how did we
examiner
have
wants,
21 million?
eh?
How did we arrive at that 21 million? Please, sorry.
150% of 14 million.
Okay,
150% of what?
of the 14 million.
14 million. It will give you 21 million.
Yes, I'm with you, sir.
So the monthly net salary and wages without housing allowance is 1,312,500. While the one of housing allowance is 437,000. So under our outflow, we have net salaries and wages 1,312,500 every month. You can see that. We also have housing allowance 437,500 every month. Can we see that?
Yes, sir.
Yes, sir.
So you were trying to, I said I don't get that the calculation of salaries and wages. You were trying
Oh,
to
I
explain
thought you
to
said
me
you have gotten
how.
it. I told you it's 150% of 14 million. When
I
you
got
get
that.
150% of 14 million, that is 21 million. You divide it into two. 25% is housing. Why the balance is how many percent?
75%.
Is the net salary without housing. The examiner wants you to show it in the question, to show housing separate, to show the net salary separate.
Okay. Thank you, sir.
Okay, you are welcome. The next note, ground what?
Ground rent.
Ground
Right.
rent for industrial estate will be received as follows. January, 1.4 million. February, 750,000. Why for March, 1,020,000. Ground rent will be received as follows. Is this one inflow or outflow?
Inflow.
It's inflow.
Inflow. So we are told January 1.4. So ground rent, if you look at it, 1.4 million January, 750,000 February, 1,020,000 and March. Are we making sense?
Yes, sir.
The next thing is note 5. Training and what?
And development
Expense,
Development.
development expenses of 350,000 are to be increased by what percentage in 2008? 10%.
10%.
That means 10% of 350,000, 35,000.
Yes, sir.
That means how much we are going to receive in 2008? 350
385,000.
85,000.
plus 35,000. That is 385,000. This 385,000, how do we receive it? The total amount will be spent on what?
Equal basis.
Equal basis. For February, how much? So that means this 385,000, we are going to divide it by how many?
By 2.
By 2. We are not going to divide it by 12. We are going to divide it by 2. February and what? October. So we divide it by 2. February and October. Once you divide it by 2, February and October, how much are you going to get?
192,500.
192,500. So in this our question, which one affect us? Only February. Training and development for the February, 192,500. That is for the what? For the February. Do we understand?
Yes, sir.
No, sir.
Do you understand?
Sir, can you please let me to recap what you said because I can't hear you because due to the network, sir.
Training and development.
Yes, sir.
Expenses, 350,000 for 2007, and is to be increased by 10% in 2008. 10% of 350,000. That is what? 35,000.
35.
350,000 plus 35,000. That is what?
85.
385,000. This 385,000, how do we receive it? It's going to be spent on equal basis in February and what? October. That means we are going to divide that 385,000 by how many? By 2. One for month of February, another one for the month of what? October. So once we divide it by 2, you will get training and development. We get 192,500.
Thank you, sir.
Now, notes. The next note, which is note 7. The corporation will commence construction of 50 units of house in the year 2008. The following are the commitment through LPO in 2007. What they want to use to construct the house, the local purchase order. The first item that they are going to buy is what item?
Cement.
Iron rod. Okay,
So
pause.
that cement, they are going to buy it 15th of August 2007. When is it going to be paid?
February.
Within 6 months.
Within 6 months. So within that 6 months is going to be how many months?
January.
February.
February. Because 15th of September 2007, 1 month. 15th of September 2000, 15th of October 2007, 2 months. 15th of November 2007, 3 months. 15th of December 2007, 4 months. 15th of January 2008, 5 months. Why 15th of February 2008, 6 months. So under this is an outflow. It is an outflow. And 4.5 in February. So if you look at our solution, cement, we put it under February, 4.5. So iron rod, the iron rod, when are we paying? When payable?
3rd March
March.
2026.
So it's going to be paid in the month of March. $1.4 iron rod, March. The next one, gravels and sand, when payable. Gravels and sand, when payable.
January.
January.
January. Why the next one is what? Plumbing material, when payable.
February.
February.
January.
Why the last one? Electrical material, when payable.
March.
March. So we are done with that. The next note to do, rent receivable from the shopping complex. Rent receivable from the shopping complex of the corporation are as follows. For January, how much is the rent receivable? 850,000.
750.
For February,
750,000.
750. Why for March?
1.250.
Sir,
I can hear you. Go ahead.
I didn't really get how we started putting this cement plumbing materials in those respective months, how we got the month put there.
Okay, how we get the month? You will look at the heading. This when payable. There is an heading called when payable. Like iron rod, you can see 3rd of March. The other one, 30th of January.
January.
You can see the other one too. 15th of February. And so on, like that. So do we understand? Do you understand? Do you understand?
No, sir, no.
You can see the period now. Eh? This is February. You put it in February. When do you want to pay for this payment? Is when you incorporate it in your cash budget. Do you understand, my? Electrical material. When is it payable? Oh yeah, answer. When are we paying the electrical material?
March.
Eh?
March.
Can you see the match? The lady that asked the question. Can you see the match? Eh? So maybe if you are not clear enough, after the class, you can send a WhatsApp to me for more explanation. So for the sake of time. So the rent receivable is an inflow. January. We have another one called February. And we have another one called what? March. The rent receivable, January, February, and March. Can we see that? Hello?
Yes,
Yes,
sir.
Yes, sir.
So now we have done with all the question. What we need to do is to balance up. We need to balance up. How do we balance up? In January, our total inflow in January is what? 4,500,000. Our total inflow in January is 4,500,000. Our total outflow in January, our total outflow in January is 2,649,625. 2,649,625. So the difference between 2,649,625 and 4,500,000, it will give you a balance carried forward of how much? A balance carried forward of 1,850,375. 1,850,375.
What is that? God bless you, sir.
1,850,375.
We are
That
fine,
is what
sir.
is he going to give it. Please, let's try to mute our audio. This 1,850,375 is the closing balance in January. It's going to become what in February?
opening balance.
It's going to become opening balance under the inflow in February. So the total inflow that we have in February, 11,850,375. 11,850,375. So 11,850,375, that is the total inflow. While the total outflow is 6,967,625. 6,967,625. That means our balance carried forward is going to be 4,882,750. Is now going to be this closing balance of February is going to be the opening balance in which month? In March. Opening balance in March. So this opening balance in March at the end of the day, our total inflow for March is 8,652,750. 8,652,750. While our total outflow in March is 3,925,275. That means our balance carried forward in March is 4,727,475. So this is one of the questions we have on cash budget. Another question that
I
we
have a
have on
question. I have a question, sir. Sorry.
what is your question?
What if it
Go
was
ahead.
a deficit? Will we take the balance to as opening?
Yes, we take it as opening, but you put it in brackets.
Okay.
Assuming this was deficit 750, you have to be in bracket. That means negative. So let's look at another question
One
on
more
cash
question, sir.
budget.
Sorry. One more question.
Okay,
So
go ahead.
I must have missed the part where you explained the 4.5 million for the cement. You said it should be payable within 6 months. How come we brought it in March in the solution?
We have it in March in the
February? In
solution.
February. We brought it in
Count 6 months from the day that was purchased. Count 6 months from the day that was purchased. You will see that it's February. When you count 6 months from the day that was purchased, you will see that it is February.
Hello, sir.
Yes, I can hear you.
Sorry,
Okay.
sir. This total, if we don't bring in the opening balance as part of the inflow, maybe I get all the total for the inflow and all the total for the outflow. Then I do I find the difference before bringing in my balance. Is it possible to do it like that, or this
Which
is
one?
the only format that can be followed in preparing the cash budget?
There are some other formats too. There are other formats too. But this
Okay.
is one of the formats. We have some
all
other
that
format too.
are they also acceptable?
It's acceptable,
Okay, sir.
but this one is the most recognized format. So it's the most recognized one.
Hello, sir.
Yes, I can hear
Hello,
you.
sir.
Yes,
Sir,
ma'am.
please. What this question is it from past question? What's here?
I don't know that whether it's for past question. I don't know. Hmm?
Okay,
So,
sir.
but yeah. So let's look at question 2 for the sake of time. Question 2. Somebody should help us read.
Okay. Effective cash management is one of the challenges of treasuries all over the world. We are required to state 3 objectives of cash planning and management. B. The following information relates to the Wawa Local Government Council's newly established division in charge of poultry farms. The local government advanced a sum of 420,000 naira, repayable in 3 equal monthly installments from December 2013. The following information was provided by the division. We have
Okay.
budgeted sales. Okay, all figures are assumed to be correct. We have 10% advance payment That's 10% of December is paid in November for receivables policy. 70% paid in the month of sales. 10% paid in the month after sales. 10% paid 2 months after sales. IV payables policy. We have growers, 80% immediate payment, 20% the following month. Layers, 50% immediate payment, 50% paid the following month. Feeds and others, payments made immediately. V, the veterinary officer is paid 150,000 monthly. VI, farm workers are paid 250,000 every other month from December 2013. You are required to prepare 3 months cash budget for January to March 2014. Hello, sir.
We are required to do what? 3 months what?
3 months cash budget for January to March 2014.
Bye. Okay. So looking at this,
So I can't see your notes. You're not projecting
okay,
again.
you can't see the notes. Let me
No,
share
sir.
it again. Let me share the note again. The first question centered on what is effective cash management. Objective. What are the 3 objectives of cash planning and management? What are the 3 objectives of cash planning and what? And management. So that is the first question. The second question talk about a Wawa local government. It's a new local government that was just created. So when they create the local government, they give us their budgets. They borrowed money to start. The local government established a poultry division. This poultry division was newly created and they borrowed money to start the production of the to start work in the poultry division. And they tell us how they are going to pay the money back. So like we all know, when we talk about objective of cash planning and management, have said that at the beginning of this class. One of the objectives of cash planning and management is to do what? Is to facilitate the knowledge of amount of what? Liquid cash. To facilitate the knowledge of amount of liquid cash available to execute projects. Another one is to show the period of cash, the period of surplus cash which can be invested to earn return. Another one is to ensure optimal cash level is maintained in the ordinary course of business of day-to-day operations. We have another one called to ensure that surplus cash can be invested in a short-term interest. So be part of this question now. When we look at this be part of this question, first question I want to ask in this be part of the question, what is the closing cash balance in December? We are asked to do the 3-month cash budget. January, in this question, we are not giving the closing back cash balance in December. We are not giving the closing cash balance in December 2013, which is going to be the opening cash balance in January 2014. What we need to do, we know when the poultry was established. The poultry is a new business. They established it in 2013. Immediately they established the poultry. The local government borrowed them a sum of what? 400 and what?
20,000.
This 420,000, is it inflow or outflow?
Inflow. Inflow.
When is it coming in? When is it coming in?
November.
It's going to come in November. The poultry was established in the month of November because they say it's a new poultry. They said they advanced them a sum of 420,000 naira, repayable in 3 equal installments, starting from 1 December. In this cash budget, the month given to us, they give us November, December, January, February, March, April. That means this 420,000 was borrowed to them in November. They will start paying back from when?
December.
December. They will pay in December, they will pay in January, and they will pay in what?
March.
In February.
February, sorry.
February. For us to get the closing cash balance in December that we are going to use as an open cash balance in January, that means as a working note, we need to do the cash budget of November and December too. As a working note, we need to do the cash budget of which month? December and December. Part of the requirement is to do the cash budget of January, February, and March. We are not asked to do the cash budget of November and December. But as part of our working note, we need to do the cash budget of November and what? And December. We need to do it. Cash budget of November and what? December. We need to do it. What is the cash budget of November and December? Let's look at it. It's part of working note 1. What coming in November? What coming? November cannot have opening balance because that is when they start business. November cannot have opening balance. That is when they start business. But what coming in November as inflow?
Grants.
Grants for 20,000. And they said This grant is going to be repayable back in 3 equal installments. When do we start paying the grant back?
December.
Why paying the grant back in December? Is it inflow or outflow?
Outflow.
Outflow. So the outflow, if you look at working note 1, 2, under December, one of the outflow is repayment of loan. When you divide the 420,000 by 3, it's going to give you 140. And one of the outflow is what? Under December, repayment of loan. The one of January and December too. The one of January and February, under January, repayment of loan, January, 140. Repayment of loan, February, 140. We have done with that. Now, going back to the question again, they have budgeted sales. Sales, is it an inflow or outflow?
Inflow.
Inflow.
Sales is a revenue, it's an inflow.
Yes, sir.
This is what the budget that they want to sell. They say they want to sell. They are selling growers, layers, and egg. The budget that they will sell growers that worth 202,200,000, 2.2 million in December. And the budget that they will sell growers of 2 million in January. They also budget that they will sell growers of 1.9 million in February, growers of 2.1 million in March, growers of 1,950,000 in March, in April. Now, this grower, this is what the budget that they want to sell. They did not tell us how they receive money from customer. What is the receivable policy? How do we collect the money from the customer that pay for these sales? How do we collect the money for the customer that paid for these sales? Let's look at it. How do we collect money for the customer that pay for these sales? Look at the receivable policy. 10% what?
Advance payment.
Advance payment. They even give example. The examiner was nice like me. I'm too nice. 10% of advance payment. They even give example. They say, e.g., 10% of December sales is going to be paid in which month?
November.
November. The examiner just opened up for us. It opens for us. 70% in the month of sales. Why 10% paid in the month after sales? Another 10% also paid 2 months what?
After sales.
You know, if you add all the percentage together, it will give you how many percent?
100.
100%. Now, we now go and open a working note. That working note we are going to open, working note 2. We call it receivable collection, cash received from debtors, or cash received from customer. The customer that pay that buy the growers, layers, and egg, the cash that we receive from them. How do we receive from them? Let's go to the first sales that we make. What is the first sales? Our first sales that we make is what? 2002. Is the first sales, 2002. How do we pay for these sales? This 2,200,000, 2,200,000, that is the sales for December 2013. How does customer will pay for it? The customer that buy the products, those items, how does the customer pay? Based on the receivable policy. How do we receive the money from the customer? That means 10% of 2,200,000 is going to be paid in which month?
November.
November. So working note 2. December sales, 2.2. 10% of it, November. You can see I put it under November.
Yes, sir.
70% is going to be paid in which month?
December.
Why 10% is going to be paid in which month?
January.
In February.
The balance of the 10% too is going to be paid in which month?
February.
That means we have completed December sales. Do we understand?
Yes, sir.
Based on that receivable policy.
So what is there is the first 10% after 70%. Okay.
We are doing this based on the receivable policy. Good morning. Do we understand?
Yes, sir.
Yes, sir.
We move to January sales. How much is the January sales?
2 million.
The 2 million, 10% of it is going to be paid in when?
December.
December. Another 70% is going to be paid in when? For January sales. 70% after 10%. Look at the receivable policy again so that you can understand. %10 advance payment, 70% in the month of sales. Abby?
Yes, sir.
Why 10% in the month after sales? Another one, 10%, 2 months what? Afterwards? After sales. So going back to the January sales, 10%, first 10% will be paid in when? Will be collected in when? December. Can we see that? 10% of 2,000, 2 million. You can see 200 in December. After that one, 70% will be when?
In January.
1.4. You can see that. We have another one, 70%, 10%. 10%.
February.
Why the last 10% is going to be in which month?
In March.
In March. We now move to February sales. February sales. For the February sales, 10% of the February sales is going to be collected in when? February sales is 1.9 million. 10% of it is going to be collected in when?
January.
January. 70% of it is going to be collected in when?
In
February.
February.
Why 10% that follow the 70% is going to be collected in when?
In
March.
March.
The last 10% is going to be collected in when?
April.
April. April is not in our budget. We did not write down one. Do you understand?
No.
We can't put April because we are not asked to do budget for April. We are asked to do budget for January to March.
Okay.
When we move to March sales, for the March sales, 10% of March sales is going to be collected in when?
February,
In February.
Why 70% is going to be collected in when?
March,
In March.
March sales is 2.1, 10% February. Why 70% March? 1.1470. The 10% that follow the 70% is going to be collected in when?
April.
In April.
It's not in our budget.
Yes, sir.
Why the last 10% is going to be collected in when?
May.
In May.
It's not in our budget. Now, the next one is April sales. April sales. For the April sales, 10% of April sales is going to be collected when?
March.
In March.
You can see April sales 1,950,000, 10% in March. 70% of April sales collected in when?
April.
It's not in our budget. We don't include it. 10% that follow it, not in our budget. 10% that follow it. At the end of the day, you now look, what is the total cash collected in November? 220 was collected as the total cash in November. In December, total cash collected from this sales of grower is 1,740,000. In January, total cash collected is 1,810,000. While in February, the total cash collected is 1,960,000. March, the total cash collected 2,055,000. We now go and put it. Where are we going to put this? Is it inflow or outflow? Is it inflow or outflow?
It's inflow.
Inflow.
So under the inflow, you can see cash received from growers layer under November, I put 220. Under January, under December, I put 1,740,000. You go to this main solution to the question too. Under the inflow too, the main solution for January, 1,810,000. For February, 1,960,000. Why for March, 2,055,000. So somebody want to ask a question. What is your question?
Yes, sir. My question is on the first note on that loan of
Huh?
14. On the loan of 420,000. I don't understand how we treated it.
Is the one I explained first. When does the loan come in? The loan coming in November and is going to pay for 3 months. You divide that 424 by 3, you will get 1140. So 140, 140. So we have already put it here. In our workings, under November, 420 was inflow. Under repayment, we started repaying back in December, 140. That means January 2, 140 under the outflow. February 2, 140 under the outflow. Any other question?
Yes, sir. I have a question, sir.
What is your question?
Good morning. That working notes one for the cash budget, why are we using November and December?
Why do we use November and December in working note 1? Is for us to get the closing cash balance in December. We are not giving the closing cash balance in December. That closing cash balance in December is going to be what? In January. Is going to be the opening cash balance in January. In this question, we are not giving the closing cash balance in December. We have to get it by ourselves. That is the reason why we put it as working notes. In the question, we are asked to do the cash budget for January to March. Cash budget of January to what? To March. So please, let's go ahead for the sake of time. Now, we have done with the sales of growers. Purchases now. What is their purchases? Purchases is an outflow. First, they purchase feed and others. They also purchase layers. And they also purchase what? Growers.
Growers.
They also purchase growers. Now, what is the payable policy? How does this poultry company, poultry division, pay for the purchases? How? How does? First and foremost, how do we pay for the feed and others under the payable policy? How do we pay for the feed and others? Payments made what?
Immediately.
That means this feed and other that we buy in December, we are going to pay it in which month?
December.
In December. So under December, in our working note 1, we put under the outflow, feed and others. Feed and other, we paid for it in December. The feed and other one that was buying January 2 and February and March 2 is going to be paid. Feed and others for January 320, for March 250, for February 260. Can we get that? After that, another item that we purchase layers. How do we pay for layers? What is the payable policy for layers?
50 immediately and 50 in the following month.
50 immediately. 50 in what? In the following months. Example, layers that was purchased in December, 445. How do we pay for it?
50%.
For the layers, 50% will be paid in December, Abby.
Yes, sir.
Why the balance of 50% in
paid in
January?
January.
Layers that was purchased in January, 500,000. 50% will be paid in January, while the balance of 50% will be paid in February. Layers that were purchased in February, 50%, 350 will be paid in February, while the balance of 50% will be paid in when?
January, March.
Layers that was purchased in March, 50% will be paid in March. 195, Abby?
Yes, sir.
Yes.
While the balance of 50% is going to be paid in April, which is not in our budget.
Yes, sir.
At the end of the day, the total layers that we paid in December, 225.5. The total layer that we paid in January, 472.5. The total layer that we paid in February, 425, 370 in March. We now go and put it in our solution. We put the one in December in working note 1. Layers, 223 approximation. Why the one in the solutions too? Layers for January, 475. For February, 425. For March, 370. The last item that we have under the purchases is growers. How do we pay for growers? How do we pay for growers?
80% immediate payment, 20%.
Okay, so we go and do a working note for growers. For these growers, payment for growers. %80. The one that we buy in December, 80% will be paid in December, while the balance of 20% in January. The one that we buy in January, 80% in January, while the balance of 20% in what? In December. The one that we buy in February, 80% in February, the balance of 20% in March. Why the last one, 650,000, that was buying in March, 80% in March. At the end of the day, the total payment for growers, 580 in December. January is what? What is it? 769 in January. Why in March? 636. In February, 636. Why in March? 640. Do we understand? So we put it under our outflow. Growers for December, 580. In the solutions too, growers for January, 769. Grower for February, 626. Grower for March, 640. Apart from that, note 5, veterinary officer is paid 150,000 monthly. Veterinary officer is paid how much monthly? 150,000.
150,000.
Every month we paid that one 150,000. Every month. That means in the month of December, that means in the month of December, we paid veterinary officer in the month of December 150. In the month of January, 150. In the month of February, 150. In the month of March, 150.
Excuse me, sir.
Ah,
If the tree started in
Why
November,
December?
exactly.
why
Why
are
did
they
he?
paying in
Why did you pay
November?
him in December?
We start production in December. If you look at
November,
the solution, we start sales in which month?
December.
December. We
But
have
it doesn't
started.
mean submission. No.
Do you understand? Another one. Farm workers are paid 250,000 every other month from December 2013. Farm workers are paid 250,000 every other month from December 2013. So every month we also pay farm worker 250,000. Farm worker 250,000. Farm worker 250,000. Farm worker 250,000. In December too, we paid farm worker 250,000. So we have done with all the note in the question. Is for us to balance up. Before we balance up anything, we need to balance up working note 1. We need to balance up working note what? 1. Look at this working note 1. Summary of cash budget for November and December. What is the total inflow that we... November is when they started the business. What is the total inflow that we receive in November? 640,000. That is what we receive in November. Do we have any outflow in November? No outflow in November. That means our balance carried forward that we take to December is going to be how much?
640.
40.
This 640,000 is going to be the opening balance in December. We add all what we collected in December too to it. When we add it, what do we get? We are going to get 2,380,000. The total outflow for December is 1,623,000. So our balance carried forward that we will take to where?
January.
To where?
January.
Is 758. It's because of this 758 that will help us to open this note, this working note one. In some question, they will give us the closing balance, cash balance in December. If they give us, we don't need this working note one. But they did not give us. So this one now, we now take it to the solution. 758. The total inflow that we have in
So I'm having
January,
757.
757.
757.
Maybe approximation give it 758.
Okay.
So the total inflow we have in January, 2568. Why the total outflow we have in January is what? 2102. Our balance carried forward in January is what? 466. This 466, when we carry it forward, we carry it forward to February. It's going to be the opening balance in February. When we add everything together in February, all our inflow together, 2426. Our outflow in February, 1851. The difference between total inflow and outflow is going to give us a balance carried forward of 575. This one, where are we taking it to?
March.
To March. 575. Our total inflow in March, 2630. While our total outflow in March, 1670. What is the balance carried forward in March?
960.
960. So that is it on cash budgets. So that is
Sir,
what we
please, I
have.
have a question.
Okay.
Please, about the veterinary officer's salary. So basically, we are not looking at when they started the business. We are looking at when they commenced operation fully.
Yes.
Okay. Thank you, sir.
Okay.